and then you learn with each of those things. But I just don't want people to learn on my retirement.
No, I totally understand. A lot of what people think mass adoption will look like is the fact that, an everyday user just goes to their bank and they don't understand that these digital assets have a use case and are being used behind the scenes to do stuff. And that's one of the reasons that I wanted to talk with you today, is to understand really the scope of what those messages are, and what's really going on, because I don't think we get that opportunity too often when we hear from just these fintech people that are creating these assets. They tell us what they're used for, but you can tell us if they're actually being used. So welcome back, everyone. I'm JTXRP, and today I have Miss Elspeth Bloodgood with us today. She is, I believe, a board member on the Faster Payments Council. I was doing some research into it because we all know that Ripple is also on this board, and we, of course, being into XRP, tend to try to do some research around there. But I also saw that Jack Henry was on this site, and actually reached out to Jack Henry through some personal connections, and I found Miss Elspeth here, and she is on. Just go on the website here. Move me a second. She is here on the Faster Payments Council website under Jack Henry, and here it builds her up in a great way. I'm hoping to hear much more about these things today. But it says that you've been at Jack Henry's JHA PayCenter, and a subject matter expert on Zelle, Fednow, and RTP networks, and as well as online bill pay for iPay division of Jack Henry. So these are kind of things that stood out in your bio. I'm gonna kind of stop sharing my screen now. So you're here with us today.
Absolutely.
Thank you so much for joining us, Elspeth, and I'm greatly looking forward to all the light you can shed for all the different stuff we hear in the Twitter sphere and the crypto sphere about what's actually going on. And it's so great to have your expertise, and thank you so much for your time to come talk to us about it.
Absolutely. Anytime.
Well, thank you. Let's start off. I introduced you a little bit, but that's probably just the highlights. I'm gonna turn you up just a little bit so I can hear you a little bit better myself. And
Okay.
but tell us a little bit about you, Jack Henry, how you fit into this whole picture.
Well, I have been working for Jack Henry for about 11 years, and about 5 or 6 years ago, they decided to start a little startup within the larger company of Jack Henry to work on connecting to faster payments rails. And at that time, both the RTP network and the Zelle network had announced that they were going to go live. So this was in the 2016 timeframe.
Okay.
And we first started with a tiny little team of about 6 people, and now we're up over 100 people. And so we've both built the technology that allows us to connect community institutions and credit unions to these new networks. And we built a business unit to support that, soup to nuts, with onboarding and support and everything. So it's been a really exciting time. It's something that you don't get to do very often in your career, which is to start something brand new and grow it up from a little baby and then bring it to market and see it succeed. So that's been really fun.
That's cool.
Prior to learning about or becoming part of this faster payments team at Jack Henry, I was in the online bill pay space and the direct bill pay space. So I've always worked a lot with electronic payments
Hmm.
through financial institutions, and this just became new ways to move money. So that's how I came to it. I'm a self-confessed payments geek.
Okay, that's awesome. That's exactly the person I was hoping to get on the show. So that's great. No, I'm like a kid in a candy store. Like, what can I ask? And what can I feel like there's too many things to pick from. Um, so let's talk about Jack Henry a bit, because many people in my sphere may not be as familiar with Jack Henry. So can you tell us a little bit about what Jack Henry does?
Well, Jack Henry, it is not a law firm, just to let you
Yeah,
know.
yes. Sounds a little bit
It's a
like one, yeah.
financial services technology company.
Okay.
and it has about 6,000 employees, and it provides all the technology that community and regional financial institutions and credit unions would need in order to serve their account holders and members.
Okay.
So everything from core systems that, basically keep track of who has what dollars in your financial institutions and who they are, to payments capabilities, to compliance functionality, to fraud monitoring, all of the things that a financial institution would need to run their business. And we serve those smaller institutions and have, thousands of institutions who use our software and our services.
Gotcha. Very interesting. So I'll know that, the big banks, and we hear big names like, Bank of America, JP Morgan, these are not your clients, correct?
No, the folks that we're dealing with are the smaller institutions.
Mm-hmm.
There's about 10,000 financial institutions,
Yeah.
10,000 in the United States. You've heard all the top, folks, the Chase, JP Morgan,
Yeah.
PNC Bank, and those sorts of things. They're very big
Yeah.
institutions, but a lot of the heavy lifting is done at the local area. And by community financial institutions that are just, serving local, maybe one city, maybe one state, maybe a small regional area.
Mm-hmm.
Those are the financial institutions that we serve.
I know, that's great. I just want to make sure we clarify. So, I mean, we're all in crypto, in the news sphere. We always hear about, those heavy hitters, but you serve a conglomeration of all these smaller companies together, and so you actually might have your finger on the pulse in some ways a little bit better because you get to see what the public's actually interacting with, as well as what those smaller banks are all moving towards together. And so it's a very interesting perspective, I think.
Well, the interesting thing is that we have to be very good at listening to our customers, and they have to be very good at listening to their customers in order to be successful. So, for example, Jack Henry has open APIs. We allow fintechs and other third parties to connect in very easily to our cores. And we did that long before there was a drive towards openness in banking. Our banks asked us for it, so we made available this thing, and then everybody talked about open APIs, and we're like, well, what does that mean? And we were told, over time, well, you already do that. And that's just the way we've come to market, is providing the services to our financial institutions, making sure they had that availability. And if we didn't have the thing they wanted, because these financial institutions tend to pick best of breed, then making it possible for their other service providers to get access to the core to support our customers. So that's why we've been successful.
That's awesome. And so, yeah, definitely listening to your customer is always the best way to go. So I think that, I mean, now giving them the right thing that they want, that's a whole nother story. But,
Well, they often know they have a problem,
yes,
right?
that's true.
They don't always know what the fix is. And so you have to be very careful when you're helping them, and they look to us to be experts in the space and to give them good guidance and to be good partners and to share the information that they need to make good decisions. So, for example, on the crypto side, we have been moving forward to support those people who are bringing crypto products to market through financial institutions, but we've been kind of slow on that uptake, and mainly because these are not institutions that are going to take great risks
Yeah.
to get started, but they're very interested in it and they want to understand what it means to them to provide this support. So, we, for example, brought in a lot of the different parties in the crypto space, talked to a lot of them, have made available those same open APIs so that our customers can make that functionality available to their account holders if they want it.
Okay. So I mean, I'm assuming Ripple might be one of those companies. Maybe, I'm
Several.
not sure you could say.
Ripple's one of the ones that we did speak with. Yes.
Okay. I'm imagining that because they're on the board, at least you've rubbed shoulders with them on the Faster Payments Council. And I wanted to ask you, so you're definitely the person to talk to. 6 years doing the faster payments just on the Jack Henry side of things. And how long have you been on the Faster Payments Council itself?
I've been on the council about a year now,
Okay.
and then just recently stepped up to be treasurer.
Okay.
So I basically assist the organization in reporting out to the board of directors on their financial status. And that's the team that works on the in the organization, the Faster Payments Council itself. They do the work. I just review it and make sure that it's consumable by the board of directors.
Oh, okay. Gotcha. Well, can you tell me about your interactions on the Faster Payments Council? Like, what is being on the council like from your perspective, just real quick?
Well, it's really interesting because what the Faster Payments Council is really trying to do is educate the marketplace. The market's really big, right?
Yeah.
It's the United States, about what value faster payments or instant payments brings to consumers, to businesses, what the use cases are. But we have a lot of stakeholders. Many people who, there are individual financial institutions, there are processors for those financial institutions, there are many sizes of financial institutions. Then there's the consumer advocates who want to make sure that the consumers are protected.
Yeah.
So you're trying to get all these people in a room. And then there's the corporates who want to leverage the services available from the banks. So you're trying to get all these people in a room and to agree to cooperate, even though in some cases they're competitors or they have other relationships, right?
Yeah.
So you're trying to bring information out, do a lot of information sharing in an environment of trust so that you can better the industry itself. And that just means that it takes time and effort and a lot of people working hard to produce output. So the Faster Payments Council's developed a glossary as an example. They have outlined how you might use QR codes in order to make payments using real-time payments. They've got a lot of deliverables that they're giving to the market.
So you were saying?
The interesting thing is about the deliverables that they provide to the market and how that has changed over time as we've become smarter as a group. So the questions we were asking ourselves a few years ago and what we're asking ourselves now are different. Before it was all about why would anyone do this? What's in it for anyone? Our financial institutions would come to us and go, nobody's asking for this. Well, of course they're not. People are seeing things available from other from fintech providers like the wallets and going, I would like to do that. Let me go over and use PayPal or Square for instant payments. And so they just march, which is why the average consumer has like 20 some financial relationships and is using many companies, because as capabilities get cobbled together over our current kind of antiquated system, the consumer doesn't see all the expense and the files being exchanged underneath. They just see the effort at the end, which is, I have something on my account someplace and it happened right away.
Yeah,
So
3 to 5 seconds. Yeah.
Yeah, they don't think about all the things underneath that are actually moving the money between the providers there.
Mhm.
So they think of that as a faster payment. So the banks could very easily be like newspapers were. You're too young to know what a newspaper is, right?
And
But what
they're starting to
happened,
realize it. So,
what happened when newspapers started to go online was very interesting. Is they were picked off not as a full newspaper, but as little pieces at a time that could be better monetized by other people.
mhm.
And so it was death by 1,000 duck bites, which is what one of my colleagues says, where people figured out how to take this information delivery system, put it in a new path, monetize that, and then all of a sudden the revenue went away, and then that's been how newspapers collapse. Well, you don't want to have that happen with financial institutions. You don't want to have the pieces and parts of the financial products that they provide get picked off by all these fintech applications who are actually being banked by some of the biggest banks, and then these local and regional institutions no longer can afford to play, or they don't have the capabilities. So
Yeah.
these new networks have been very interesting in terms of providing access to the smaller financial institutions as a core part of their mission. So we're lucky at Jack Henry. We have over half of the institutions that are live on the RTP network, as an example. And the RTP network is, of course, a faster payment network that is built on the ISO 20022 messaging system, where a consumer or business can initiate a transaction through their financial institution that will move money from an account at the sending financial institution to another designated account at a receiving financial institution in seconds, and settlement occurs at the time of the transaction.
Awesome.
So that becomes very powerful, because the sender knows the dollars got there, the recipient knows the dollars are good because they have to be good funds, which means that they've been paid for. You've already debited the account of the sender. And so they know they're not going to bounce like they might with an ACH. It doesn't take 1 to 3 days to get it there, because we're not relying on batches of transactions in a file. It just moves more quickly, but it also gives you finality, and it gives you more confidence in this transaction, because no one can come in and pull money out of your financial account using this method. So you get to say when the money comes out of your account. Now, those are all great things. And it's also built on this messaging system that is an international standard, which means that already the RTP network is now doing proof of concept, and then a pilot to figure out how to do international real-time transactions.
So you've already got local transactions. You'll eventually you're doing a pilot for international right now.
So the RTP
Cross-border.
network is
The RTP, okay.
in the European corridor. So they're and you can go out and Google international real-time payments and it's in combination with Swift and the RTP network and IXB. And so what happens is you essentially can do end-to-end with from a financial institution in the United States through an institution who's a member of both networks, both the RTP network on this side and RT1 in Europe, and then they have the ability to connect with another institution on the other side that can then send through to the final institution. So you might have 4 institutions, but the transaction is going to go within 20 seconds. And you're going to know that it was successful, that it ended up where it needed to go, and you'd be able to determine exactly how much it's going to cost. And all of those are very different than the experience most people have with moving money internationally. So that's just one use case, right? Is international real-time payments. That's really the biggest use case that drove the United States into having a real-time system, because a lot of people were like, file-based is good enough for us. There's no reason to invest all these millions and billions of dollars. But
yeah, it's sometimes it's hard to move, until people are like, oh yeah, I need to move. Like I get that. Let's talk about ISO 222 for a second.
Sure.
Now, there's been a lot of hype, I'm just gonna say, around that, and certain tokens, specifically XRP, XLM. Are you familiar with all these as well that I'm talking about for these standards?
I'm really familiar with the ISO 20022 message set, and specifically the messages that allow you to move payments.
Yeah.
So I'm less familiar with the other standards you're talking about.
You're not from gosh, there's standards that allow you to attach a crypto or a digital asset to the message, correct?
Yeah. So the big thing the United States is starting to put in place for financial institutions is the ISO 20022 messages to support wire transfer and to support these new real-time message networks.
Okay.
Now, what you could tie into with them is really a different, is really a use case. So you could have a link out, you could put that embedded in the message itself, but you really have to have an application that's going to leverage being able to pull that data out and move it around.
Okay.
So just to move the money, we're using a series of credit push, response messages, requests for payment, response to request for payment, request for information, response to request for information. So it's a very limited set of messages. And what's on the network today are even skinnier than what the networks want to support in the long term. So the volume on the network today is largely about moving funds from corporates to consumers or other businesses that the sender already had the account number and RTN number for. One of the bigger use cases is actually to send funds out and to fund some crypto wallets. So those are transactions on the network today, on the RTP network. When I talk about on the network and using real-time payments, we're really talking about the RTP network because it is live. Fednow won't be live until
July.
Sometime in July. The Federal Reserve hasn't announced the specific date yet. Yeah.
And we'll get to that in a second. I feel like I got you on the ISO conversation. So a lot of us have the names of these coins got mentioned in the standard somehow. And so, I couldn't trace you back, but I've heard them since like 2 years ago. And everyone has said that because these different digital assets met the standard, and so therefore they were going to be the new payment rails of the world, essentially. And so now, of course, fast forward to right now when I'm talking to you, it seems like the messaging systems are still there. It just allows them to use these digital assets as well. And
Yeah.
I kind of want you to elaborate on
So
like
what
what's
happens
the
in a
scope?
bank? What happens on on a on the blockchain are kind of two different things.
Yeah.
And a payment on the blockchain is not necessarily real time because it takes a lot of time to get everything updated around the blockchain.
Okay.
If that's out not being monitored by a financial institution. So the difference between having money move that's really cheap over the blockchain and having money move through the financial industry of banks and credit unions and all the compliance that goes along with it is really all about security. It's about security and compliance. Are you sending to people who are on the sanctions list?
Yeah.
Are these good actors? Are they bad actors? It's all about all the compliance that goes along with being a financial
AML, yeah,
institution and
KYC, all that.
regulation.
Yeah.
So you can move money if it's, you have something that you have that could be owned and you can move it around on a blockchain, but it's really not as secure because it's not as regulated. So there's
Okay.
this tension between cheap ways to move stuff around and to not have people in your business and having an infrastructure that everybody kind of understands, even if it's a little arduous, but everybody understands that it's being protected from a lot of credit risk, et cetera, up to and including systemic risk, right?
Yeah, I mean,
So
there's going to
the
need to be
bank,
controls. Yeah.
so what the banking system is really doing is providing controls, and where they get concerned is because of the things that have happened with some of the the recent
Yeah,
events
I understand.
where things have just evaporated and there haven't been controls and people have kind of gone off wild. I think of it as being very similar to tulip mania in the Netherlands in the 1600s, where a tulip they really loved tulips, right? So you could trade in tulips, and people were trading, mansions for a specific kind of tulip bulb. And
Wow.
then one day tulips weren't the thing anymore, and there was a big crash. So part of what provides for stability is all the infrastructure and compliance around financial institutions. And that's something that over time we'll see if you can have these two systems side by side. And I think the market's trying to figure that out right now.
Well, I definitely think there's use case for like I don't know. I don't know how familiar you are with XRP in general, or its use case for cross-border remittances and that kind of stuff. And
I have some understanding of it.
okay.
There's a reason that these things are good, because right now it's very difficult to move money cross border inexpensively,
Yeah.
because people have had to do point to point settlement with partners on either side in multiple corridors, and so
Yeah.
that's hard. And so having a vehicle that would make it simpler makes a lot of sense. The question is, can you do it on the blockchain or without the regulation that you have wrapped around financial institutions, or can you leverage a lot of these new faster payment networks that are coming up all around the world? And there's about 65 of them now. So that's why what's going on with RTP is so interesting, because they're really starting to try and leverage that. A lot of other countries have it easier than we do because they have fewer financial institutions and more centralized control over the banking system,
Mhm.
where the central bank can mandate. That's not what happens in the United States.
Okay, yeah, we're gonna get into that in a second with Fednow, because there's definitely concerns around that, and I hear you're an expert on it, so I'm really interested to pick your brain. But let's just stay on this real quick, because I really want to get to the root of like what the ISO 222 is. I've been doing a series on it a little bit, and again, the concept behind the what am I going to call it, the echo chamber, I guess I'm into a degree, is that that again, that these blockchains will be used as the new rails, and you're saying no, these are, the blockchain settlement is
Think
different
of,
than the message settlement that's happening
think of the
between.
message set as how we're going to encode the data so that when I send you a packet of data, you can understand it.
Okay.
And that the packet of data is about a payment. That's what the message set is for ISO 20022. But the rails that packet of data are going along, in the case of RTP, there's an MQ server on one side, an MQ server on the other side, dual data centers on both sides, dual instances in each of the dual data centers, and designated lines, right? It's
Okay.
a very heavy duty infrastructure into that central switch. If you talk about how they're implementing ISO 20022, which is the message capability,
Yeah.
right? They are implementing it in a way that financial institutions have what's called Fedline.
Yep.
And Fedline is a direct connection in one of multiple various ways. And you would send this message across that secure connection into the Fed that you have signed up for. And then the Fed's going to do all the manipulation of putting it on a queue and then processing those. So it's not the infrastructure. The message set is just a message set to communicate about payments.
Okay.
Fedwire is going to also use the Fedline connection.
So let me ask this in another way. So ISO two I don't know how you want to say it, 222 its messaging standards are being currently implemented. They need to be ready by 2025, correct?
Mhm.
So
Yeah.
the way I look at this this standard coming on is kind of like a city with lights being turned on over time. Like you see one city's, lights turning, like one town over here's lights turn on, then another over here, and all of a sudden the city just becomes lit over time. Now, I use that light in the metaphor to realize that these different digital assets could be used more often within those lit areas. Is that
So
a
you
correct
could,
assumption?
yeah, because think about it this way. Up until now, everyone has had a proprietary format for sharing data about payments.
Mm-hmm.
The dollars are not as important as the data. And we know that because if you send money to somebody, like at the water company, and you don't give them information for how to post it, they're going to send it back to you, right?
Okay.
So the data is really important. So what the message standard gives you is a format so that various different parties in an ecosystem can share information about the data about the payment or the dollars that are being exchanged, or whatever the thing of value is that's
Yeah.
being exchanged. So it just gives you more room to add structured data. Historically, we've had very little structured data go along with a payment. We've had 80 characters that could be about a payment in an ACH file. ACH file is 94 characters,
Okay.
and 80 of it is payment related data. And the reason that it's 80 characters is because IBM cards
Yeah.
had 80 characters. And then when they turned them into MAG to mag readers, right?
Yeah.
The piece of the tape that would come up in one, at the bottom that a reader could read at the same time was 94 characters. So it became 80 characters of payment related information and 14 characters about where, what that record was. So record information. So we've been running a system based on IBM punch cards for decades.
Yeah, it's
right?
horrible.
And you couldn't, and what ended up happening is that wasn't enough data. So in order to share data between parties, they made up all these other things to do. And we got to EDI in the 70s. But if you've ever looked at an EDI file, and if you have, I'm sorry, I did not come up with the standard, but it's all slashes and stars, right?
Okay.
And it's very, deep. And not only the biggest companies could figure out how to make it happen. And then everybody else just started sending one-off files to all their trading partners. Well, these files are hard to exchange and they go down, and then you have to, it's really heavy infrastructure to maintain file-based transfers. And then you have to match the data back up to the dollar amount that's in your bank account. So, the new way to do it is to have these ISO 2022 messages. They let you stuff a lot of data in that can go straight through with the dollar in a format that if everybody signs up to be able to process it, they should be able to just take that data, stuff it into their system, and everybody's fat, dumb, and happy.
The dollar or the digital asset, right?
Or whatever the thing of value is, right?
Okay, cool.
So now you've got ERP systems and accounting packages and banks who are trying to play in this space, but they're all new to it. They've been doing the other thing for a long time, and the other thing was ugly and difficult, but it was their baby and they love it, right?
Yeah.
So now you're starting to try and add this new ability, and no one's quite sure how it's all going to work because everybody has to play nice in the sandbox together.
I hear you. But well, provided the use cases are good and they work well, let's say for a particular digital asset could be used for X, Y, and Z purposes. Would you not agree that in the analogy of the city with the lights coming on, that there would be more opportunities to use those use cases as the lights of the city?
Absolutely.
Okay.
So the things that you have to do is to make something better is you have to solve for all the problems that the current system has.
Yeah.
And then you have to add additional benefit, because no one's going to stop doing something that works for them for something that isn't fully featured, right? Doesn't solve all their problems. And you think of the bill payment analogy where no one's going to stop getting their paper bill and sending a check in until they have a system that meets all their needs and does whatever it does. So the bill is the reminder that I have to pay the bill. Yeah. And then the paper check was really easy because I could go once a month and I could put all my my envelopes in the mailbox with the stamps on it. And then online bill pay came up. And then now everybody wanted the paper bill so they know what to put in to the online bill pay. And then, but you couldn't get people to turn off the paper because the paper was the thing that prompted them. So then everybody's been trying to solve for getting electronic bills into people's banks. And that's been difficult to solve because it's all screen scraping technology, and that's difficult, right? So you have to really kind of think through what's going to solve for all these problems. And sometimes you just run up into technical, you don't have the technology for it yet, and it's going to take a while to get there. But then if you have really big industry efforts, and the industry can only accept so many of these big efforts, you have the opportunity to sort of redo everything and revolutionize the entire marketplace and have them talk to each other in different ways. But first, it ends up being processors who are in the middle of it, who are trying to support various parties, and they're going to do all the heavy lifting. And then eventually it becomes native, and then everything changes over time, and we have things like we have today. When the Check 21 Act went into place, the first thing that happened was it just mandated that you could send somebody an image replacement document instead of a paper check in their envelope of, because your grandma got her paper checks that were canceled every month. And so all the legislation said grandma had to accept an image replacement document instead of that original paper check that had been canceled. Well, the whole purpose of that was to enable electronification of paper checks, but it took a long time to happen. It was done, and that went into effect in 2004, 3 years before iPhones. Well, one of the biggest things you can do now is you can take your iPhone, take a picture of a check, and deposit it into your bank account. When those laws first came into place, about 20 years ago, nobody had an idea the iPhone was out there, or that anyone would ever take a picture of a check to deposit it.
So yeah, I'm sure that people would think the same about digital assets and how that could add to the scenario. Well, let's get into Fednow real quick, and
Okay.
let's talk about the dangers of CBDCs, what you're seeing on your side of things, and so let's actually,
Well,
sorry,
just to be clear, Fednow is not a CBDC.
I understand. I'm going to actually share my screen. I'm going to go back a second. I want to ask you about something. So this is XRP Proton on Twitter here, and I'm just going to share his video, just a small clip, and because I'm going to ask you about it here in a second.
Now-stellar.com, you'll find this asset that was just recently created that I happened to find, right? This asset just came out yesterday. So you scroll down. You can do this with any asset on Lobster Wallet. If you click on View on Network Explorer, it'll take you to the Stellar Ledger, which is Stellar Expert. This is the ledger. It shows you basically everything you need to know about the asset. So if you scroll all the way down, not all the way down, but you scroll halfway down the page, you'll see the organization page, right? Fednowstellar.com. If you click on that hyperlink, where does it take you? Oh, to the Fednow website. Interesting.
Yeah. So I wanted to ask about that because I wanted to know about Fednow and behind the inner workings of it. And I wanted to ask if you knew of any assets or if you could tell me if that's legit or not, because someone could have gone and created all those links to the websites and created, as far as I understand it, created a digital asset, claiming to be something, but no.
It's not. That has nothing to do with Fednow.
Okay, cool. Just wanted to confirm that real quick.
No, yeah.
Because
Fednow is a system. So they call it a service, and it is a service that allows financial institutions to initiate transactions to other financial institutions. So it's moving money from one account at one institution to another account at another institution.
Mm-hmm.
And the Fednow service is basically a switch that can take that ISO message and send it to the right place. And it's a very chatty message. You send a message in to the Fed, and it says, I have $10 for Bob at Bank of whatever. And then the Fed runs some checks on that transaction and then forwards that message. I have $10 for Bob at Bank of whatever to Bank of whatever. Yep. And Bank of whatever looks up Bob's account, sees that Bob's in good status and that he can receive transactions, and sends a response back to the Fed that says, yes, I can take this. Then the Fed affects settlement between institutions by debiting the sending accounts, Fed master account, so the bank's account, and crediting the bank of whatever's account at the time of transaction. And then it sends a confirmation back to the original financial institution and then to the other financial institution that that this has been completed, right?
Yeah.
So it's moving money essentially from one Federal Reserve master account to another, such that it's reflected in the individual accounts at the two financial institutions. So it allows you to move money, but it is not a digital asset.
Yes. Okay. And there's no digital asset underpinning it.
No.
Okay. I'm just
Now, the Fed has talked about and has announced that they're thinking about creating a CDBC, right? But the Fed moving really fast takes like 5 years from inception, and they would have requests for comment, and they would have open comment periods.
Well, we'd hope, right?
Do announcements, and
yeah,
this would be a whole long initiative for them to get live with something like that. And I think they're going to wait and see what Fednow does and what the appetite is for that.
okay.
And there may be people who build, things that are pegged against the dollar that could be run across these blockchains.
Yeah.
But I don't know that how quickly we will in the United States see a central bank digital currency.
Even with China, probably, I don't know if you're aware of how much China has tried to push us out and get people to stop using the dollar.
Well, they've just done some major things in the last few weeks about
yes.
trying to change the denomination that's really present. So yeah,
Okay.
I can understand that.
I was wondering how
there are a lot of pressures on the Fed, but they
Yeah.
still can only move as fast as they can move, right?
Okay. I mean, I don't know. We'll see. That seems like everything goes really slow until it doesn't, right? But the I guess with Fednow, is it worse than a central bank digital currency right now because there is no blockchain to read? And for what you're seeing on your end and the messages that are going on, is there any real threat to privacy or anything like that you're aware of?
Nothing that's any more than the know your customer.
Okay.
So banks are really required to know their customer, and that can feel very invasive. But the idea is they have to know who they're banking so that they can verify that they're initiating legitimate transactions. And in the world of banking, there's a lot of bad actors. There's a lot of fraud. There's a lot of scams out there trying to get people to send money. So knowing your customer becomes very, very important. And there's a real tension between knowing your customer and having to have a lot of information about people. And I think that's a real sensitivity. And I understand the complexity of that. At the end of the day, you're trading the feeling of security and that you've got something regulated versus having something where you may lose everything that you've invested.
Gotcha.
And one of the prices to pay for that is to share your information and with a financial institution.
So one of the things that the government could do, in spite of creating a CBDC or not, from my understanding, is they could still understand and create a social credit score and like where you're, knowing where the money's going and, not dox people. What's the word? Negatively impact people for making certain decisions, especially with faster payments. It would be even faster for them to be able to do so. And I'm not, again, you're supposedly the expert on Fednow, at least the one I have access to thus far. And if you want to point me to someone else, I'll, go bark up that tree. But would this be possible? This kind of government mentality that we're fearing, I guess, from the US to become like China in some respects?
I think that's kind of a philosophical question almost.
Okay. Well,
I will
actually
tell you
technical,
that,
could it be done with what we have right now? I guess is my
on the
question.
banking side, the banks are really trying to protect their customers from bad actors and protect themselves from bad actors, because they often end up eating fraud and scams, right? So they don't want to be holding the bag. And then they have regulation coming down from the government who doesn't want to be funding terrorists. And that's this oversimplification, but that's
I hear you.
Just leave it at that. Is that they don't want to be funding bad guys. So that's where all these requirements to know who you're banking come from. And that's where the requirements for sharing a lot of information, especially if you're a business, comes from. You want to know that anyone who's coming in and asking you for funds is legitimate, right? So I think that people are willing, there's a certain level of that people are willing to do in order to safeguard their assets, and whether they're on the blockchain or not. I think that there's a lot of people who don't want the government to know what they're doing, who are just not, they're into nefarious things. But
we're not
there's a
talking
lot
about
of
them.
other people who just don't want the government to know what they're doing, right? So I could understand that.
Well, I think we're used to having cash to be able to pay for things, and we're moving. Well, granted, I use a credit card, so I mean it's all there anyways. But like the supposed anonymity that we're moving away, we're even moving more to this digital space to where it's it's much more transparent, and we're used to having a certain level of anonymity with the transactions we have, and if that's going away too, it does feel very Big Brother-ish. And so
yeah, but it's not necessarily the government that's going to be paying attention to that. It's your financial institution who's going to try and offer you services, or
sell your
Amazon
data.
who's going to try and resell you things. It's more on the corporate side than it is on the government side, honestly.
But I understand, and I'm not like I serve,
and I'm it's just an is for the system the way it operates today, and we give up our data to companies very easily. It's different in other countries, like in Europe. People are very willing to give data to the government and very unwilling to give it to corporates. We tend to be the other way around.
Yeah, maybe we should go a little bit of that way to some degree, but I guess my question is, from a messaging standpoint, from a technical standpoint, could something that bad be implemented? Because some people have critiqued that Fednow could be worse than a CBDC potentially, based on how it's used.
I think that really there's more data that could go along with the payment. So there would be more data that your financial institution might possibly see. But so it will become more important that you understand how your data is being used by your financial institution.
Okay.
But everybody wants to know how to provide you more services so that they can, sell you more product, right? I'm not sure how much that is going to negatively impact people beyond that at this point. And it may be that we all have to take a better look at our terms and conditions. But I will tell you that the consumer, the CFPB is pretty much all over those kinds of issues. So there's a lot of consumer representation out there.
Okay.
And there's a lot of consumer protections in the payment space itself that allow consumers to be made whole. And the consumer protection agencies are really more focused on protecting people from fraud right now, I think, than on those privacy cases. Although you do see privacy legislation coming out of California and some other states.
Gotcha. Well, you've given us an overview of Fednow. You allowed me to ask the CBDC question. Do you believe that you said if Fednow is seeing, or sorry, the Fed is going to see if Fednow and and I guess the world's reaction to it, and then they might do a CBDC. It sounds like.
That's my personal opinion. That is not the that is.
I understand.
If you got
That's
as
fine.
many payments people in a room as you could fit, everybody's probably going to have a slightly different interpretation of that. That's my personal opinion.
I hear you, and that's fine. That's you're here, your expertise, your opinion, your speculation, if you will, is exactly what I'm kind of interested in. I'd love to hear your speculation, actually, on both the crypto space as well as you have a very good perspective on the banks, and there's been a few collapses recently, and there's been people, I forget, I'm gonna go blank on her name, but she was put up in front of Congress, and one of the guys asked her, well, what about the smaller banks? So you're just going to bail out the big ones, or X, Y, and Z?
Well,
So
there's always a tension between how much of somebody's dollars, right, that they
yeah,
have in a financial institution should be covered, because they don't want to have adverse incentives. But I think that you'll find that that regardless of the amount that they say is insured, that
hmm
historically and probably into the future, account holders will be protected, while stockholders will probably not in these cases, and that they have a very efficient way to go in and shut institutions down and then restart them as a bridge company and then sell them so that people can continue to be serviced. And they got a lot of practice in that over time when there were a lot of bank closures, especially after the 2008 crisis. I think that the crisis with the most recent one was kind of self-inflicted, and that's one of the things we've learned is that the legislation, the rules in place really didn't anticipate being able to start a bank run, over a weekend electronically,
yeah,
and that wasn't really considered. The fundamentals of the institution were not bad, but when you have, a phone call and all the investors find out, and then they start to try and move their money, then
yeah,
that becomes the problem. So I'm less worried about that than other things. I
well,
actually think that the Federal Reserve and the regulators do a pretty good job of that. Now, are they underestimating some of the systemic risk? Maybe there are people who argue that, and they may be correct, but I think that the concern over that is a little bit overblown. I think that was really specific circumstances, and I'm not sure that you want to cure it too much, because we have
okay,
every time you add more regulation in that area, you have the potential for there to be, foolish rules
gotcha.
that don't bring a lot of value.
So you don't think that smaller banks are in trouble in the larger ecosystem?
I think they are if they don't keep up, if they don't make the changes they need to make to service their customers where they are, then their customers will go elsewhere. There's just a lot of financial services that are provided by fintechs that are taking transactions away from the smaller banks, and so they really have to focus on keeping their account holders and providing them with value.
Okay. Well, let me ask you about the digital asset, cryptocurrency, blockchain space. Like, what is after your 6 years being on creating faster payments and dealing with maybe having to incorporate them or hearing about them from the Faster Payments Council. What's your take on the space and its future?
Okay, I admit to being a Luddite in this. I was asked the same thing a lot of times by a former boss who
Okay.
invested in cryptocurrency and saw it ride up to very high and saw it took some hits, but is still really pleased. I'm a little more hesitant.
Okay.
I fall on the side of preferring a regulated space, because I think that's safer overall. I think that it keeps the worst impulses at bay. But I could be wrong, you know. I have been wrong before. I'm just a little bit more hesitant. I'm a little more on the I guess bear side on
Okay.
crypto.
Okay.
And I've been following it fairly clearly. Recently, I just think that there's a lot of folks out there who have no business playing in it unless it's, money that they can afford to lose.
Yeah, it's a space that we're hoping, gets regulation and different stuff soon. Unfortunately, it seems like if you're familiar with Ripple, it's going to come through the courts. So,
And that's not a great way for it to go. It's,
no, but
but personally, I haven't invested in it. I did have an opportunity many years ago to get a coin, right?
okay.
When I first came out, on my phone at the time, and this has been years back, and
XRP or which one particular?
I should.
Okay, don't remember. Okay, it's fine.
And I turned it down because it was like it was at a conference, and they were like, come up afterwards and we'll give you a Bitcoin, right?
Oh, really?
Back when Bitcoin
It was
was
a
a
Bitcoin.
dollar, right?
Oh,
Because it was
wow.
brand new. It was, and I couldn't figure out what it was, and I didn't accept it. So I could have had a Bitcoin, but I tell you, if I had had it on a phone, and I probably wouldn't have known what I had, and the phone would have, gone kaput, and that
I
would have
mean,
been the end of that. So it's probably better I never had it, so I couldn't regret it.
I've heard many stories where people lost access to their wallets or didn't think anything of it and came, whatever have you. So yes, I've heard many of those stories.
Yeah, so I think you never know what those early things are going to do, and you have to really decide what your risk tolerance is.
Yes, absolutely.
And I think they're fascinating, and I love learning about the mechanics of it, but I find them a little frightening.
Okay. Well, maybe I can get you to maybe I'll get you offline to create a Zum wallet, and I'll shoot you some XRP and you can tell me your thoughts. That
Okay.
sounds good. I mean, who knows? It could be, it could be the next scenario you talked about earlier. But who knows? It's all my
Well,
speculation again.
I think that there's a place for those things, and I think that this is early days, and it takes a long time for acceptance. And you go up and you go down, and then you learn with each of those things. But I just don't want people to learn on my retirement.
No, I totally understand. A lot of what people think mass adoption will look like is the fact that, an everyday user just goes to their bank and they don't understand that these digital assets have a use case and are being used behind the scenes to do stuff. And that's one of the reasons that I wanted to talk with you today, is to understand really the scope of what those messages are and what's really going on, because I don't think we get that opportunity too often when we hear from just these fintech people that are creating these assets. They tell us what they're used for, but you can tell us if they're actually being used. So
Yeah, and I think that we'll see more of that. I think that the blockchain stuff, there's a real use case for permanent ownership and that kind of untrusted area. Whether the coins are the right application, I don't know. I'm fascinated with all of it, and I'm interested to see how it goes.
Good. Well, I may have a couple introductions for you, that some people that may have some questions for you. But is there anything else that, like, what questions am I not asking that you would love to talk about here about faster payments or
Oh,
FedNow, what
just
have you?
just that the Fednow network or
Hmm.
service is going to start up at, like I said, in July. That's when the early adopter and pilot banks will go live. So there's, you know, dozens of them that'll go live probably starting in July. And
Okay.
then general availability will be later in the year. And we'll really be interested to see how fast those volumes improve, and what kind of new use cases come out of it.
Okay.
So
So we'll really understand a lot more around July.
yeah, July, when they turn the lights on, if everything goes really well, that'll tell us something. And then as they move into general availability, we'll know more.
Gotcha. As the lights come on in the city, right? Yeah.
Exactly, just like you said.
All right. Well, thank you so much for joining me today. I hopefully maybe I can have you back around July, and we'll talk again at what you're seeing, or maybe there's other conversations that we can have that where I could use your expertise. Love to have you back if you're open to it.
Sure.
Okay. But this has been Elspeth Bloodgood from Jack Henry Associates, the Faster Payments Council, and I'm JTXRP. Thank you so much for joining us, and we're out.